Hello, welcome back to Family Investment. This is one of those videos where over the years I wish I could warn people sooner. Why? I've always been an uber bull in the stock market, especially the tech stocks. As an engineer myself, I could see the evolutionary change in over times and the new technology that's coming through. And as we stand just now, the AI development, Nvidia, and host of other companies coming through, I still believe that's the case. But one thing that I would like to warn folks is if there was ever a downturn, not just for profit taking, but for other various geopolitical reasons, it could get bad from here. And investing is going to be a game of cat and mouse. And if you do not survive, you lose. And the losers will get hurt pretty badly. So this is a video of an early warning, not happened yet, and I wish I was wrong. But if I was right, I want to make sure that this video gets out as soon as we can. Okay, so here, stock market news, week 11, very early start to the year 2025, and we are getting so much volatility already. And this volatility could confirm a potential incident that could come up next. Okay, so we have a picture of the obvious Titanic going towards the iceberg. And we all know what happens when two meets together. One will survive and the other will not. And as it stands with the geopolitical tension, with many things, it's like when you watch Titanic himself, the captain says, power through, I want to break record, I want to do anything that I can appear on the newspaper the next day. Exactly what's happening. I'm sure President Trump himself and his team are in favor of trying to make America great again. But with the powers around them and influences around outside of America, Europe, Ukraine, the war, inflation, and the feds, sometimes he cannot steer everything out of the way. If he misses the iceberg and passes, we all survive and he'll be the greatest American president on the financial stock market ever. But if not, we could go down significantly bad. So this is why this video, I want to portray how could it happen, because I'm not clickbaiting you, but I'm honestly trying to share what I have seen as my independent observation. Gold 2,900. I'm very hopeful that it will come down, but guess what? Gold will not come down. It's expecting to hit 3,100 by the end of the year. So gold is staying where it is. The only way gold will come down as a safe haven if the interest rates goes up. Gold will only come down if the stability of the economy, when people are starting to move the assets away, or de-escalation between Ukraine and Russia. There's a reason why the gold is up, because it started off with inflation and also the Ukraine and Russia war. Until those get eliminated, we're not going to see gold price go down. Also, we've got the VIX. The VIX to me is one of the best indicators we have used. The VIX is there to tell us how the climate of the market is. And we know that the VIX is used as a climax factor. When it shoots up, boom, it comes down. We all know that the bottom is over. But for now, the VIX is on a slow choke. But the great news is the last 10 years of volatility, when it spikes up really high, we get a long bullish run. Every time it erupts, we get a long bullish run. But at the moment, we're at a standpoint here. It doesn't mean that we're going to get 10 years. And so far, we've got about 5 years. It doesn't mean that this is going to be a one-off. It's going to come back down. Until it climbs up and we all survive, and great, we might go continue our bullish run. But for now, it's slowly choking up and there's no climax factor. And you can see when I say climax point, look, it's still really low on the MACAD. Every time there's a climax, the MACAD shoots up, but now the MACAD is as close to zero as possible on that chart. So where do we go next? Okay, S&P 500. Many people are going, it's a little profit taking, but that is phase A. I think the whole profit taking has happened. Now we're escalating to phase B, where we could go, we're already going to correction, some correction, no correction, but we go into deeper correction. This is where we see. And this is what's been shared by everybody on YouTube. Very positive people, very zen, positive, like nothing's gonna happen. Profit taking. Every time it hits the 200-day moving average, it bounces up. So nice, so nice. Life is so great, it bounces up. We get a bit of setback, it bounces up. But is this real? Is this real? It looks like we've bottomed. They might be right. These guys might be right, but I'm seeing something different here, guys. Okay? This is what if. If it bounces up, fine. We're going to go even higher. But what if it doesn't bounce up? Okay? What if it doesn't? What if it doesn't? Look here. This is the indicator. This is the mother chart of God all. This is where the 50 and 200 moving average meets. Okay, this is called the death cross. 50, 200 meet on the downward spiral. It goes deep down on the SPY, S&P 500. And when it happens very rarely. When it happens, when the death cross, it goes really, really deep. I can prove it to you. I can show you. And I monitor this every single time. And when I speak confidently, because they're not close, but they're so close just now, with Donald Trump, with the Trump trades, with retaliation, with the ongoing Ukraine-Russia war, with European beefing up on the defense, with gold spiking up, and the list goes on. Japanese trade, and the list goes on. And now I sound like bloody Adam Sandler here when he's angry. Okay, let me show you the charts. So the last time it happened in 2022, when we had the 9 months of a bearish cycle, it dropped 25% when that death cross meets. Back in COVID, it was a shorter term, maybe 1 to 2 months, but the death cross meets as well. And it went down, spiraling down, and nobody cared. When that cross, people sell. They don't give a flying squirrels. And then back. Trump trade war, 2018, 2019, anybody remember that? Just before COVID, death cross came through. China and US trade war, it came down. And guess what? It took about almost a year before it recovered, but it went down minus 20%. And back during the oil crash in 15 and 16, it went double Dutch down, okay? It came, death cross came back down, and we thought we recovered, but the momentum stalled. And guess what? It came back down again, double Dutch down. And when it crosses its last all-time high, it took about more than a year before that happens. Can you survive 1 whole year? Can you survive? See, these people on the internet are sharing this very happy picture that everything goes up, okay? It's dangerous because you don't speak about the downturn. This thing could last for a long time. How can you survive? Many people do not survive this. This is great. I love this part, but this is the part I'm talking about. We are here. Where we are, we don't know. How deep we are, we don't know, guys, okay? We just have to be absolutely careful. Let me show you a very, very grim picture. Here. Take 3 seconds to look at it. What do you see? Okay? When the Titanic hit. Okay? Folks here are the survivors. Folks who live to tell the tales. Folks who live to tell the tale. If they can survive another 7-8 days out of the sea in the blistering cold, they could live to tell the tale. Okay? Folks out here who don't have an insurance on a boat, those guys do not live. Those are the retail investors who did not sell fast enough and bought the wrong dip and bought the wrong high risk stock and continued spiraling down. They cannot survive, they sold. They threw the emergency funds in, they sold, made lots of huge loss and never came back. Some lose families, some lose jobs, things could happen and things could escalate. So all I want folks to understand is let's survive this for now. If you think that I'm talking bull here, but all I'm in good nature is to talk about survival. What do you do? What do you do, Alex? Tell me. You're talking all this big talk now. What do you do? Beef up your emergency funds, meaning that either you take some money out of emergency funds or you don't touch your emergency funds. Do not jump and throw them back in because remember, you got families. Yeah, you guys watching me, you guys have families. De-risk. De-risk. All your high-risk stocks, start de-risking. Don't be hopeful that your HIMS or all that nonsense stocks are going to spike up, double, triple again, all your Palantir. Come on, guys. Be realistic, okay? Be realistic, okay? De-risk. Go focus on the qualities. Focus on the qualities where you have. Qualities, they will pull down, but look, the quality stocks have pulled down maximum 5, 6, 7%. And some of the stocks have pulled down at least 40, 50%. Play the long game. Survive with me. Just survive. Stick with me and survive with me here. So I just want to leave the last slide here. If you all do survive this, it'll be rainbows and butterflies, I promise. If it doesn't go as bad, fine, I'm wrong. But if it does go as bad, we just have to survive this. The dot-com bubble, the 28, the COVID crash that wipes out in a couple of weeks, eventually will make all-time high. We will come out right at the end because the technology push and the global growth in population and the population needing this productivity of AI, robotics, self-driving cars, and many other AI agentic that's happening right before us. We just need to survive this And this could play out very, very well for us retail investors. So thank you very much for watching. I hope you find this useful, and always be prepared. Thank you. Bye-bye.